What's up, traders? My name is Tony Strugar and welcome to the channel. For those of you who don't know, I'm a funded trader with CK Capital UK, and I'm also the head trader for a crypto fund here in Australia. But last week or this week marks a really special and unique time for me. I've decided to go through a whole new process of getting funded through FundedNext, going through a one-step 100K challenge with them. So I kicked it off last week, and I want to go through the entire process with you, documenting wins, losses, emotional successes, emotional turmoil, everything, just the real journey of going through a funded account or a funded challenge, and then ideally going on to being funded and moving on from there. So it's going to be a 100% genuine and authentic showcase of my trading and going through this process. And the reason I'm going through FundedNext now is because I want it to be funded sooner than later rather than going through a two-step challenge, right? So FundedNext has got their one-step challenge, which has a max drawdown of 6%, right? Which is very good. But the biggest thing is that there's no trailing drawdown, right? So if your account goes up 3%, your max drawdown does not pop up with it. Now, I love CK Capital. The support's great. The CEO, Dan Chung, he's an icon, in the Forex space. So I really love him and respect him. And I like the conditions with CK Capital. I can also trade on C Trader, which is what I really like to trade on. So nothing wrong with CK Capital. I'm going to continue to get more funding through them and trade my account with them. But I want to get a one-step challenge, and CK Capital's one-step challenge has a trailing drawdown. And for me, in my risk model, it does not work. Not even just for my risk model, my psychology, it does not work for me. So I'm going through FundedNext. I had a look at a lot of the CFD prop firms in the space, and I feel that FundedNext has the best one for a one-step challenge. A really good price as well. I think it was like $560 US. So for me in Australia, it's under $1,000, which is really good, right? So I'm going through this process with them. I'm going to show you the dashboard just so you can see where I'm up to at the moment. Last week I started it. Now I've had the first two trades were losers. I'm not phased at all. That's trading. But first two trades were losers, and I did have a short on Euro USD that I closed this morning before the weekend for a very small profit. But with all the news headlines at the moment, I don't want to have this position open over the weekend. If Monday morning opens up, at the same level, and with nothing crazy in terms of headlines, I'll get back into that position. But let's go and have a look at the charts. I want to show you the two trades I placed last week, and then show you the dashboard as well, so you guys can see everything right from the get-go and follow this journey with me.
All right, so we're logged into the FundedNext account. Now you can see here we've got the Stellar one-step challenge, 100K. Current equity, $98,887. So as I said, there's already been two losses on this. I'll explain my risk model in a second so you can understand why that was where it is. But you can see this is active, right? This is an active challenge. There is my name. You can see it. Now, if we go into the dashboard, right, I haven't really looked at this properly yet. So we'll see this together. Now, right, cool. Start date, 29th of September. So as I said, last week, 2025. Now balance here, profit. Now there's been two losses and a small bit of one small winner as well. So 3 trading days. Now I wonder if this is going to show it in here. So past minimum trading days, there you can see maximum loss $6,000. So max permitted loss is $4,887 remaining to go. Cool. Profit target 10%, which is $10,000. So this is what I really like about this one-step account, right? So 10%, you just have to do it once in a one step, right? And there is the $3,000 daily loss limit. Now that's enough. Like I'm not risking 2% per trade or even 1% per trade, really. So I'm not going to have 3 open positions or 4 open or 5 open positions at once. So this daily loss limit, not a worry. Don't have to worry about that. Profit target, 10%. Beautiful. There's only one step. So that's not a big deal. This is the biggest thing, 6K max loss. Now, if you're managing your risk right, this shouldn't matter. My CK one has an $8,000 max loss limit on the 100K account, right? And that's amazing. Like seriously, I don't go by trading 1% per trade, right? 1% of your capital. So on a 100K account, a lot of people just say as a blanket rule, trade 1%, $1,000. Now, if you go into, like for me, if I go into a losing streak, which I always do when I start a challenge or get a funded account, I always go into a losing streak. It's just what happens. Not that I'm executing poorly, it just happens. So I'm not surprised, but the account's only down 1%. But if I was risking 1% per trade, right, I would already be down 2%, more than 2% because of the swap fees and the commissions. So I'm only down 1.1. So much better for my psychology. I don't risk 1%. Now my risk model is quite unique. Some people won't agree with it, but I've looked at, well, not just looked at, I've modeled out the entire risk model going from the opening the account and how many losers you can have in a row before that account is breached, right? And then what's really important though is looking at how quick you can recover those losses. Now, let me explain. The risk model is if we've got $6,000 a year max loss, the way I decide the risk per trade is you'll risk 10% of your max loss at any given time, but you also have a risk floor. Let me explain. When we started 100K account with $6,000 max limit, the first trade's risking $600. That's 10% of 6,000, right? First trade was a loser. What do we risk on the second trade? Well, in the ideal world, not thinking about swaps and commissions, if you've lost 600 out of a 100K account, right? Your account is now 99,400. So your max loss now is 5,400. The next trade, so your second trade, you're risking 10% of 5,400, which is $540. You lose this one, you risk lower again, which is now it's in the high 400s. Now, that is okay. What's bad for dynamic risk management and makes you hard to your recovery your account is if you've started risking 1% and you have 3 losses in a row and you're down 3%, and then you all of a sudden go, all right, I'm going to drop my risk now to 0.5%. You have one trade now, you have to get, a 1 to 2 for you just to recover, one loss. That doesn't work. Like, it does for some people, but for me, that to me is a risk model that does not work. This one 100% does, and I'm going to do a whole video on this risk model, just so you can understand it. But the risk floor for this is $300. So as the account starts getting lower and lower, right, it will just go on forever and ever if you keep on doing 10% of your max loss. And at that point, they will get to a point where it's just impossible to recover that. You will need way too many trades to recover it, and you may as well just stop trading it and get a new funded account, right? So with this one though, I put a risk floor of 300. So if that balance gets low enough to the point where it goes under $300 risk per trade, it just stays capped, or the floor is 300. Now, with this risk model, I could have 16 or 17 losing trades in a row and not have breached the account. Phenomenal. From this getting down, if this gets down to 94,000 or 94,300, so that I've got one more trade to put on, right? There is only in between 5 and 6 winning trades that you would need to recover that account back to break even. So 17 on the way down and 5 to 6 on the way up. It depends on your risk reward. My risk reward is around a 1 to 3 to 1 to 4. All right. So for that, I can recover that quite easily. And I've got such a big buffer on the way down. And the reason why you're able to recover it quickly is because your position sizes increase as your account increases again. Now, if you think if you're a break even, right? Break even now, and then you're risking $600 per trade for that first account because it's 10% of the 6,000. Once you have a winning trade, your risk for the next trade goes up. So your account is able to exponentially go up, but on the way down in drawdown, it's a very slow and smooth declining equity curve. On the way up, it's parabolic. So I'll do a whole new video on this. It's absolutely, for me, your risk model is one of your biggest edge. If you've got shit risk management, you're not going to do well, even if you have a good strategy. All right. So I will do a whole new video on that. But that's just explaining why this $6,000 max limit to me is 100% fine. This is perfect, right? So as you can see, these are this is where the account's sitting at the moment. It's a Saturday here in Australia. So yeah, that we've had 2 losses and that very small winner. Now we must be able to see like I'm literally looking at this while I'm doing this video because I have my own journaling that I do. Will it be under transactions? Nope, that's billing history. Oh shit. Nope, you don't want to reset. If a trader violates his rules, you can't be suspended. Cool. All right, so that's good. You can see this is where you will do your reset. Now payouts. I'm not going to waste time looking at this right now. Either way, this is that account. But I'm going to break through to show you the 3 trades that I placed this week. So you can see how I traded it, and that they didn't work. But would I trade them again the next time if I saw the same setup? 100%. I only have one setup that I trade, so 100% I will trade it again, and next week I will be. So we'll break into that next little piece right now. All right, so this is NZD CAD. These are the 3 trades. It was NZD CAD, CAD Yen, and Euro USD. So NZD CAD, right? Well, this is on the 4-hour time frame. You can see here, forgetting about this, you can see here that we had this clear level, break up above, and then we're bouncing on here, bouncing on here. We had the breakout below, right? So that to me is very, very nice in order to look for a sell here. All right, so what I always do, I'll place the Fibonacci, look for our key level that it's going to come back to. All right, so generally, if you're looking at a trendy move, in order for that trendy move to have to be a strong trendy move, you want it to retrace back to the roughly the 50% mark, right? Anywhere in between the 382 and the 618 is generally, that's called the golden zone. So when we had this break here, so this is the last lower high, even if you want to use it from here, it's still relevant, right? So it doesn't really matter if we've used this one or this one. We're just looking to see how far back it's retraced. So it retraced into this 382. That dotted line here is 50%. So it's rejected perfectly off the 50% bearish engulfing. Right? Beautiful. Not where I entered, right? I'm waiting for a couple more confluences, but it's clearly rejected at this support now turned resistance. Bounced off it, come up here, right? We had this nice wick above into this 4-hour supply zone. I'll take this trade every single day. Oh, wrong one. Right? You can see here, this bullish candle before a bearish explosive move. Price tests here, closes back under that support, and for me that's initiating my move to sell. And time again, this will be a very nice trade. Now this time, as soon as we literally, if you go to look at the hourly, are we looking for some kind of a shift of structure? We didn't have the shift of structure on the hourly here, so you can see still uptrend, higher, so high, equal low, lower high. So this lower high for me was, yeah, cool. This is the lower high. We're going to start to get it pushed down here. But I've entered there, and within a couple of hours, taken out. Unfortunately, we did get a 30-minute break of structure. So look, it's a trade that I'll take time and time again. Unfortunately, this time that was the loss, right? So that was loss number 1. Now, CAD Yen, second trade, we were going long here. Now, if you just ignore, right, and this is the beautiful thing, this is why you need to have stop losses. If you don't, you're holding on to an absolute, this trade will wreck your entire account. So for me, I've always got a stop loss. If I lose a trade, it sucks. I hate losing, but you have to be prepared that you're going to lose some trades. So we had this. Now, if you go back on the daily, you can see a little bit more context as to why I bought this, right? Or this was a long trade. So we had this level here, creating support, broke, using it as resistance, break above, break down, a bit of fuckery here, break back above, and we're bouncing off it here 1 time, 2 times, right? So we had those 2 bounces off here, one here, this big, strong rejection candle, not on as much volume as you would like, but still a rejection candle. Pumped it up here. Now it's using this level here. This is more of an intraday or a 4-hour time frame support. You see here it was resistance, use the support, fuckery, use the support. And that's why I'm like, cool, I'm gonna buy at this support again. Once again, actually get back here. Yeah. Now what we had this move here. So that was that, and it was on really nice volume. So where would we expect this to bounce to? This is that golden zone I just spoke about, right? This is that golden zone after here, and it stays in it. It stays within it. It bounces within it. It bounces within it. Yes, we did get rejected here at this trend line, but that, to be honest, a lot of the times when we get this close to a trend line and we're getting, squeezing up into it, we'll generally get price come up here, and even though we'll reject it, we'll come up here and we'll get some consolidation here, and then we'll break. So that's what I was anticipating, right? I'm not worried that I'm buying into a trend line, because trend lines don't mean as much as support and resistance do. Yes, we rejected here, but this I've identified as a key area where price could bounce from. And initially, price did bounce very nice. It was up almost a 0.5 risk reward, and then just sold off and took me out at breaking. Took me out at stop loss. So that's the two losers. And like I said, whenever I start these funded accounts or challenges, I go through a couple of losers, and I guess it's just what I'm used to now. It sucks, but I'm just kind of used to that happening. But this was the Euro USD position. I got way too much happening here to get this on. All right. But this is the Euro USD position. Now I got shorted here on Thursday. Yeah, we had a really nice sell-off. So it was up nearly a 1 to 2 risk reward, right? It was up nearly a 1 to 2. 1 to 1.85. That's a nice move, right? So I was aiming for the 1 to 4 here. Partials there. But anyway, so what we had, right? We got the 4-hour here. Now you can clearly see, if you just take this off, this is enough to see that we had resistance. This area is all coming up into resistance, breaking above, and now we're back below. We're back below this level. Oh, not the one I wanted. All right. That was where I rejected at. We're back below this level now. So I'm like, beautiful. Got the Fibonacci retracement. Price has come back into that golden zone. It's rejecting there. Now, what do we see on the lower term time frames? What do we see? And let's get rid of. I just want to not get rid of that. I want to get rid of this real quick so you can see. So on the hourly, we've got the hourly coming up here. So the hourly is in an uptrend. Bloody hell. Let's get rid of that. Let's do that again. All right. That's the high. High, low. Equal high. Equal high. To me, that's your liquidity. That's getting liquidity right there. All right. That's breaking above these equal highs. And then that comes with the break of structure on the hourly, which is why I had that red horizontal line there. So we had the break below, right? We had this test up here. I wasn't entering here just yet. I was waiting for, I wasn't entering this one. I think it was too early in the morning. Yeah, this literally happened when I was asleep. But we had another test back up here. So a very nice entry. I'm really happy with this trade. Very nice entry. Had that nice clean move. And I was sitting through this, happy to sit through this trade. This nice wick up and high volume at midnight. And in the morning, I get out roughly here. So I took like a $100 profit. So, but like I said, if the price opens up like this, something like this on Monday morning, then I'll go back into this trade, looking at any kind of news headlines that played over the weekend. But I still really like this because it's below that support level. We've had the liquidity grab. It's still trading, like I said, it's still trading below there. It's still a very, very valid trade. One thing I don't like is that on this move, on this hourly, breaker structure, I would have liked price. I really would have liked price to reject in this zone here. That would have been your strong bearish trendy move to go further and lower lows and higher lows. But we broke above it here, broke above it here. So it's still above, right? And now this is what I would call a 1 hour bearish trend that just has lost its momentum. It doesn't have a strong bearish momentum to it. It could just be consolidating up around this support level, and then we may get a push down here. But that was one thing I didn't like. I was hoping, not even hoping, I was expecting I would have been more positive if price from this low, right? If price from this low came up and did something like this, and then did that. That would have been really good. But it didn't, so it took a tiny profit. But we'll see how market opens up on Monday. So those were the 3 trades for the week. I might post another video before the week opens, or maybe as Monday opens, talking about the pairs that I'm looking at, because I don't day trade. I don't get in and out of trades quickly. Like 3 in the week. It's generally about 3, 4, 5 trades a week. And they'll be generally holding for, could be 12 hours, could be a little bit lower, but it's generally around that 12 hours to 1 to 2 days, something like that. So that I can have my life as well, because I don't want to be sitting in front of the screens all day long waiting for shit to happen. I want to set trades, set and forget, have a stop loss, have my take profit, watches the market or the move trends, see how strong that momentum remains, and then I can kind of manage it from here. But I'm looking forward to having some more trades that we can talk about, and you can get to see how I analyze the market and what are my reasons to get in each time. But peace. I hope you've enjoyed this. Like and subscribe if you want to just learn any of the ways I'm trading. If you want me to look at any pairs that you're currently looking at, post them in the comments and I'll be more than happy to have a look. But we'll see what next week brings. I think it's going to be a very positive week. And all you need is 2-3 winning trades and you're up 5% more. So yeah, beautiful. All right, guys, peace out. Have a good weekend, and we'll see you next week on the charts.